Well, hi there and welcome to the ISC FX Options Weekly Outlook for April 2nd, 2012. As always, this is Jason Ayers of OptionSource.net. Let's start off with a weekly chart of the U.S. dollar index. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. Well, the uptrend on the weekly chart continues to hold as the 78-79 focal zone remains a key support. Now, a break below 78 will signal a bigger picture move lower. The 80-81 focal zone remains a strong overhead resistance. A bounce this week is likely to retest 80. Let's take a look at the daily chart. The daily chart reflects the strong support at 79 last week and the near-term resistance at 80. Let's take a look at the CDD, the U.S. versus the Canadian dollar. Well, the CDD continues to consolidate above the previous downtrend line. A break above 100 should signal a move higher. 98.99 remains a strong support to any move to the downside. Next up, the U.S. dollar versus the Japanese yen, as seen here in the ISC FX Options pair value YUK. Well, the YUK bounced last Friday after a test of the 81.82 support level. A break below 82 opens the window for a move lower. However, it appears as though a bullish wedge has formed, and a break above 83 opens the window for a continuation to the upside. Let's take a look at the EUI, the US dollar versus the euro. Well, the EUI held support at 75. A break above 75.5 is likely to yield a tradable move higher. We may see a move lower into the 74-75 focal zone this week. A break below 74 is likely to signal a continuation to the downside. Let's take a look at the BPX, the US dollar versus the British pound. Well, the BPX broke below support at 62.5. And this suggests a continuation to the downside. We need to see a reversal and subsequent break above 63 to signal a move higher. 63.5, 64 remains a key overhead resistance level. Let's take a look at the AUX, the US dollar versus the Australian dollar. Well, the AUX finished last week with a retest of the 96.97 resistance level. A break above 97 should signal a continuation higher. A break below 96 is likely to yield a test of support at the 94.95 focal zone. Let's take a look at a few of our key points. First of all, the U.S. dollar index held support at 79 but still remains indecisive. A break below 79 will signal continuation lower. The CDD continues to meet with resistance at 100. A break above 100 should signal a bigger picture move higher. The YUK appears to be forming a bullish wedge. A break above 83 should signal a continuation higher. The EUI continues to hold support at 75.76. A break above 75.5 should signal a continuation higher. The BPX dipped below 62.5, opening the window for a move lower. We need to see the pair trade back above 63 to lend credibility to a move higher. The AUX ended last week back in the 96-97 focal zone. We need to see a break back above 97 to confirm a tradable move higher. A break below 96 is likely to retest the 94.95 level for support. And this has been your ISC FX Options Weekly Outlook for April 2nd, 2012. As always, this is Jason Ayers of OptionSource.net, reminding you to sign up for your free webinar at www.optionsource.net. Thanks for joining me here this week. We'll see you here next week.